But let me give you a specific example. Bitwise in its earlier days, we raised about $6 billion in seed capital from some of the largest venture capital investors in the world, folks like Khosla Ventures, General Catalyst, etc. And we have some pump and dumps. We need to separate the good from the bad. If you refuse to regulate, then they mix together and people can't disentangle them.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.
In, let's say, 3 years is taking on a huge amount of risk. If you look at the history of crypto, there are multiple 1 or 2 year periods where crypto has been down, but there's never been a 3-year period where crypto has been down. And if you extend out, it's on this multi-year time horizon. People may remember other disruptive investments, like investing in internet search or investing in the growth of social or investing in the growth of mobile. All of those had huge volatility early in their growth years. And the same thing is true as crypto. So 3 years or more, I think you'll be all right. Shorter than that, yeah, maybe you'll have some sleepless nights.
What percent of your portfolio? I think that's a big question too.
Yeah, well, for me, it's an irresponsibly large number, right? So we won't
At least you can
discuss
admit it.
that. I know that, but I have very high conviction at a very long time horizon. The average Bitwise client has about 2.5% of their portfolio. What the academic studies show is anywhere between 1 and 5%. Above 5%, you really start to impact the overall volatility of your portfolio. And it is a very similar journey to ETFs. And I think in 10 years, we'll all look at crypto. Everyone will be doing it. It will make the world cheaper. And people will be like, why were we so confused about this?
Okay, let's pick up on that point, because certainly the election of Donald Trump seemed to unleash these animal spirits in the US in particular, and really around the world when it came to crypto. But before I think we can understand those animal spirits, I think we have to understand maybe why crypto felt a little bit more suppressed under the Biden administration.
Yeah, I think a little bit is probably an understatement. It was a really difficult regulatory environment. I know when you tell people that, people say, yeah, whatever, but let me give you a specific example. Bitwise in its earlier days, we raised about $6 billion in seed capital from some of the largest venture capital investors in the world, folks like Khosla Ventures, General Catalyst, etc. And we think that all the hype was not worth it. But I also think that criticisms that, there's no real world impact have to collide with the reality that it's faced an impossible regulatory environment. So I think we're going to see that real world impact much faster and a much larger scale than almost anyone anticipates. I think it's going to be transformative.
So that's interesting. You mentioned stable coins, because they basically are matching, let's use the US dollar as an example, matching the value of the US dollar. And I think maybe at the origins of crypto, and there's probably still a big group out there that think of this as an alternative to fiat currency. Stable coins really depend on fiat currencies, but maybe transacting using them a little bit more efficiently. Have we moved away from, or do you think we've moved away from the possibility that we're going to pay for a cup of coffee using Bitcoin?
I think both things can be true at the same time. Blockchain is a disruptive technology that can be used in. Let me take that one first and then go back to the criminal question. The problem with our previous approach to regulation is that we refused to regulate crypto. Crypto had asked for regulation. They asked for regulatory clarity, but we refused to do it. Instead, we punished good actors and allowed bad actors to thrive. So here in the US, the SEC sued Coinbase, which is a publicly traded company that is relatively well regulated, has a phenomenal track record, and it didn't investigate, sue, or do anything with FTX. Right. So we were focused on the good guys and not the bad guys. And that was wrong. We need regulatory clarity so investors understand the difference between something like Bitcoin and Ethereum, which are these, in my view, game-changing technologies with real fundamental value, and something like meme coins, which are ephemeral schemes in many cases and pump and dumps. We need to separate the good from the bad. If you refuse to regulate, then they mix together and people can't disentangle them. So I add more by the end of this year.
About the round numbers, let's go to our second question, which is about Ethereum. And it has spawned all kinds of memes because when crypto goes up, it just seems like Ethereum is kind of running in the wrong direction. And this question from Bart in BC, why is Ethereum languishing? Why is it left out in the cold?
Great question, Bart. Ethereum has middle child syndrome. So institutions love Bitcoin because we have this ETF, this structural supply demand mismatch. And then the cool kids in crypto love Solana, which is an Ethereum competitor, but faster, cheaper, and it's the center of the meme coin casino, et cetera. And Ethereum is just lost in the middle. If you're an institutional investor, you're chasing Bitcoin. If you're a crypto native investor, you're chasing Solana or smaller assets. And there's no one chasing Ethereum. It's having sort of a debate on how it should structure if you want. But I wouldn't know. I'd feel very uncomfortable. I feel much more comfortable just buying them all.
Well, let's make you uncomfortable. Why would you pick Ethereum?
There's this concept in crypto called the trilemma, which it's hard to build a programmable blockchain that's secure, decentralized, and fast. And what Solana has done is focus on being fast, right, and secure. Ethereum has sort of solved all points of this trilemma because it's solved the fast problem through the growth of L2s or layer 2 solutions built on Ethereum. So to my mind, it's sort of figured out this trilemma. And so it could be the most valuable blockchain in the future because it's the only one who's really figured out how to have all 3 points on this trilemma.
But it's expensive, isn't it? These, like, they're called gas fees. Like that's
well, so there are 2 ways to process transactions on Ethereum. You can process things on growth of internet communities. I find it intellectually engaging, but I don't think we're going to be buying our coffee with fart hammer.
I hope not. That actually brings us to we did have a question on whether Doge is legitimate. So maybe elaborate just a little bit more on how because it seems like you do have criteria. You're not willing to maybe throw out all meme coins, that if there's certain boxes that are ticked, it's worth taking a look at. What are those boxes?
Yeah, well, look, what the problem with meme coins is twofold. One is that they're ephemeral. Right? They're here today and gone tomorrow. And so you don't want to buy something that's going to go to zero tomorrow because you don't know how soon tomorrow will come. And the other is that they have this mismatch between insiders and the public. In other words, people are worried insiders launch these coins, drive up the price, sell them, and then registration online and on a blockchain. So I think it's interesting to hold in a portfolio as a bet. Blockchains will have value to institutions and have sort of regulated adoption. That's sort of how I see that. Polkadot had an interesting technological architecture. I know there are a lot of people who are excited about it. I think the world may have passed by that technological architecture. So it's not one that I spend a great deal of time thinking about today, but I do spend a reasonable amount of time thinking about Avalanche.
This next question is from Julie in Toronto. Do you think NFTs will regain value? Do you have a view on which ones? Let's maybe just take a step back, remind everybody what NFTs were, because they were all the rage for a couple of years. Non-fungible tokens.
Yeah, non-fungible tokens. You can think of the mainstream NFTs today as sort of digital artwork that you own. People are comfortable owning a company that generates profits and has a balance sheet that you can investigate. It has quarterly statements you can review. And I think both are valid. The most important thing is sort of to get off zero. The best case, you own both.
Okay, well, let's get into it. The first one is owning those companies. It's a Bitwise Crypto Industry Innovators ETF. You'll get MicroStrategy, which, has been the trailblazer in adding crypto to its balance sheet, but then you get exchanges like Coinbase. You got Galaxy Digital in there. How should you think about what these companies offer for you in crypto?
Yeah, the thing I love about the strategy, it has a screen that focuses only on companies that really engage in the... Oh, we screen out a lot of assets. What are some examples? We don't hold Binance Coin because I think that may be deemed a security by U.S. regulators. We don't own Dogecoin, to go back to our analysis, because we don't hold meme coins in the index. There are a large number of assets that don't make our screens to get into it.
Well, I just want to recap. So no Binance coin, no Tron, as you said, and no Dogecoin, even though you've said, it could be of the more legitimate fun coins that are out there. You were going on to say what your approach is to get included in this index.
Yeah, the flip side of that is we look at the largest assets that meet these risks, that can be custodied by regulated custodians, that are liquid, that we don't think are at risk of being deemed coin and self-custody it. That's the sort of OG way of owning crypto. And I think people who do that are doing it well. If you're not going to self-custody it, if you're going to buy it from an exchange or buy it from an app, the ETF is just the cheapest, best way to do it. I mean, there's no two ways around it. The expense ratio is 20 basis points. The trading is done by institutional traders with sort of decades of experience in the space. The custody is with the largest custodian in the world. It's audited, it's regulated. You'd have to be investing $5 billion to get those kind of terms from leading custodians in the world. Or you could buy our ETF and invest $10 and get the same deal as the largest institutions in the world. Yeah, I mentioned I come from an ETF background. The beauty of ETFs is they let mom and pop investors invest on the same terms as the Harvard endowment. And that's what Bitcoin ETFs